Welcome to Rich Keys Trading Channel, where we unlock one candle at a time. Please pay attention to the disclaimer on your screen. And with that out of the way, let's get into the charts. Welcome back, traders. Today is Sunday, the 31st of August, 2025. It's about 4:30 a.m. New York time. It's the end of the month, and as usual, I like to look at the candle print that was left behind from last month, last week, last day, last 4 hours trading sessions to see, what these candles that have been printed on the chart will lead us to in the next trading sessions for us to take advantage of trading opportunities that it may present. So without much ado, I would like to analyze the charts, and I want to start with the dollar index as usual. And since it's the end of the month, I like to look at what the monthly candle looks like now. So last month we had a strong bullish engulfing candle, suggesting that we had found our floor on the fall on the dollar. However, we couldn't even push slightly above that bullish engulfing candle, and we started selling off. We have currently sold off probably almost 60% of the bullish engulfing candle. And as a matter of fact, when I put a Fibonacci measurement on it, it comes right to the 67% retrace from this high. So with now usually a 67% retrace is a Fibonacci support zone as well. So technically, the dollar is in a support zone on the Fibonacci measurement. Um, so let's keep that in mind. However, when we look at all our indicators, indicator wise, everything is still pointing down. Our prices are all below our moving averages, suggesting that the bearish momentum is still strong on the dollar index. So there's not much actually on the dollar in terms of where we're going, other than the fact that indicators are all pointing down. Cycle is still in the low ranges. MACD on the monthly was showing some signs of momentum strength. As you can see, this was 3 months ago momentum candle that was printed, and the last 2 months momentum has been pretty strong to the opposite side, although still in the bearish camp. As you can see that the histogram bars were much shorter compared to all the other months that the dollar has been falling. So on the monthly, this suggested that there is some form of change that was happening on the chart. With this change complete in this month that we are coming into September, where the monthly MACD would turn over to a green, it's possible we would have to go on a lower time frame to see when and how that could potentially occur. But let's keep in mind the trend is still strongly down. And that's about all that I can probably figure out on the monthly chart. We don't have any divergence at the moment on the monthly, but a lot of times you don't necessarily need a divergence for a trend to change. You could potentially get a lower high, and that could be it. In other words, this is the lower low, and you forming a lower high here, and that could be the next move up. So let's keep that in mind that the dollar could bounce based on the shift in momentum and strength from the monthly setup where we are now. Since we haven't been able to close below the previous month closing. So that let's step down to the weekly and nailed it down to a shorter time frame. Now on the weekly, as I was saying, the Fibonacci measurement of the 67 or 618 zone is currently acting as a support on the fall from uh, the retrace that we had, which came to somewhere around the 0.382 retrace level. So this is the 0.382 retrace level, and this is the 618 retrace level. If you measure from the high that we had here all the way from somewhere here. okay, to all the way here. This is our previous support that we had, and then we went all the way up to almost to the 21 period moving average, and then we have started coming down. And this is the 3.382 fib retrace. This is the 618 retrace level. So price is technically trapped within these two. I'll call that resistance and a support at the moment until we break this level. So technically, we are in a sideways, choppy market on the dollar index, where I could see liquidity being swept up around the 3.382 fib retrace level, and it's finding support at the 0.618 to 67% retrace level. So this is where I'm looking at on this weekly time frame. Let's keep in mind that um, the trend on the weekly is still down until we get a candle that opens and closes above our blue line here, which is a 9 period moving average. You should still keep the bearish bias on the chart. All right. Although yes, we getting some inverted candles. These inverted candles can be quite deceptive, making you think that we have found our floor here and potentially we could be swinging up. Now, I'm not saying based on what we looked at on the monthly, it's very possible you could get that. But for you to be able to completely assume that the downtrend is over and this is our lower high that we have now found, and from here we're making our way up, um, you would need a candle that opens and closes somewhere around here. All right, so you see where I put here max pullback. Okay, so if you get a candle that opens and closes above our max pullback level, you could then start to change your bias and cut any short position or selling position you have on a dollar pair out. So here is very important. This level is very important. When you get a candle open and close, here we had one here where we went above the 9, but as you can see, we did close also below it. We need the whole candle, not just like this one here, where we closed above the 9, although we started all the way. Now, this is a bullish engulfing candle that obviously took us above the 9. But as you could tell, we have sold back below the 9, suggesting that liquidity is above the 9 period moving average, and the market makers are just clearing the liquidity. So this is what I see based on these candles, that is mostly a liquidity sweep. I don't think that this is going to be the lower high for us to keep going high, but I keep that as a caution to limit a loss in case that should happen. My bias is still to the downside, based on the fact that all my moving averages are still down. Price is still below all the moving averages. These are forming something like a continuation, um, a continuation of the downtrend. It's like, let me step down to the daily. I think on the daily we might get a little bit of a bigger picture. Just before I go to the daily, let's conclude the weekly with the um, indicators to see what the indicators have also kind of left behind. And as you can see, MACD is thinning out. In other words, momentum is dropping to the lower side gradually. MACD lines haven't yet crossed the zero line. That tells you that momentum is still bearish on the MACD indicator. When I look at my stochastic cycle, you is still pointing downwards. We haven't found our stochastic floor. Yeah, here was a floor, here is a floor. We haven't found our stochastic floor yet, suggesting that the move down is not done. And this is why I said those candles that we are watching seem to be like a liquidity sweep candle. If you look at your RSI, the divergence that took us up has played itself out. We went to the 50% level on RSI and we have started coming back down. Now, of course, should this turn around and keep going above the 50 and we get a candle open and close RSI above this 50% level, yeah, you could then start to think of the reverse bias and say, okay, you know what, probably this is the floor and we might be going a little bit more up. um so yes, on the weekly, you know, I don't see this as a reversal on the weekly yet. And on the daily, you know, if you look it up from the daily confirms what I was saying, that we have the sideways choppy thing in place. You know, if you look at this whole daily candle that we printed since somewhere around the beginning of August, like August 5th, thereabout, all the way to the end of August, price is pretty much stuck between the 0.382 fib retrace level and the zero point 0.67 or 618 support zone. So we've really been trapped within this range. We haven't broken out of it. And it's also very likely that this play out would continue in the next coming week. There is no certainty at the moment until we break this support trend line that I have on here. So I'll tell you the other reason why I said I'm still bearish on the dollar is this support trend line here. We came to it here, found support here, has come to it right here again. You know, so this is where we are still right here again at this support level. Now, should this support level hold, potentially, yes, it could push us further up, like towards the resistance zone. And if you should get a candle open and close above this 0.382 retrace level, where I've labeled here with a shooting star, and also with this, flashing red light, okay, that is your change bias. Now, I know between here and here is pretty a wide swing, but if you're not careful, you could lose a lot of money if you are not going to wait for a clear breakout of one of these levels. But you can trade within the range, you just need to know what you're doing. So I'm just cautioning that in sideways choppy market, that's a very dangerous territory. Um, when we break out of this support trend line, then we're really going down, and our targets are way low. Like our targets will come somewhere between the 96.278 below the low of this beginning candle. The reason being that I see this as a bearish flag. Some people call it a bear flag. Okay, now the bear flag that I'm looking at, it's pretty much like, we started the fall from somewhere here. Okay, so we started the fall from somewhere here, and we fell, came, we found support here, we rallied, in a 1, 2, 3 pattern retrace, and we have started coming down. So take this as the flag. This is your pole, and this is your flag. It's a bear flag. All right. So once we break this support trend line, I'm expecting the bear flag. If you measure the distance from here, and this is why I have this thing here. Let me actually take this from here. So if you take this measurement from the top to this level, okay, so all the way from the top to this level, from here all the way here, that's the pole that I'm measuring. Well, then where would the fall eventually lead us to? I think if you put this right from the top here, okay, to here. So this is why I have the ultimate target somewhere here. In other words, I'm expecting this whole flag to make its way all the way in the same distance to about this level. So once we break this support trend line that we have here, now I can take this off. Um, yeah, once we break this support trend line that we have here, my ultimate target is somewhere here, which is the 94,329 level. All right. So that would be the ultimate target. Doesn't mean we'll not do push and pull between this level and this level, but that would be the long-term trade bias. Okay. Let's wrap it down to the 4 hours so we can see what we are looking at for the coming week when market opens on Sunday around 5 p.m. New York time. Um, and I think for me, I'm still watching this candle closely. Um, Reason being that this candle that we formed here was so strong a bearish candle, we need to actually, we have done the full retrace of the candle technically, um, when we came all the way with a shooting star here. So based on this daily chart, and with this shooting star candle, that tells me rejection of value above, um, the moving average. This is the 50 period moving average. The momentum to the downside is strong, and I'm expecting that we might push up slightly up, but ultimately, break this trend line and break this support. So coming in the week, that's what I'll be looking at. And based on the 4 hour chart, where I have labeled everything. So this is our previous low, went all the way up. That's a big candle that we did almost a full retrace of. So this was the candle that I was showing you on the daily with a light on it. Okay, with a red light on it. I'm still expecting, although yes, we did have some candle wick below the close of this candle. It could be all that we got, and I could then nullify the idea that we still need to close below this candle, because if you look on this 4 hour chart, after we made this steep, I call them velocity candles, because the selling was so strong, and we've done the full retrace of the candle all the way back up to where we started from, and we have started coming down again. Now, if we do find support here, then it means the fall below this candle is already taking place, which is a place we have labeled as A. It means the fall below here has already occurred. That's all that we were going to get, and that's all we get. But I think we'll get more than this. Again, based on the fact that we have done a full retrace and now we're coming back down. When we came back down, as you can clearly see, this is the same trend line that I was showing you on the daily chart. Okay, so the same trend line is still on here, and we broke the trend line on Friday. We have retraced to test the trend line, and I think to test this again, here was our previous support. Okay, so we've broken the trend line. We've gone to test the trend line. I think because this candle is showing some strength of, or some bullishness to it, from here we may push up slightly into somewhere around 97,480, even all the way down, all the way up to 97,550 is on the cards. It's very possible that when you get these velocity candles, most times you do get a retrace, if not 50%, sometimes a little bit more than 50% of that candle. So I'm watching this velocity candle similar to what I was showing you on this candle, that we may get a retrace all the way up to about this level, 97,550, there about somewhere right between 97,550 to even potentially 97,595. Um, and then from here, I expect us to continue our journey down. Indicators wise on our trading time frame, um, let's start off with MACD. And as you can see, MACD was gaining some strength here. We went above zero on the histogram, although our lines are still below zero. This is very neutral. It's neutral. You go up, you come down. You go up, you come down. It's just bouncing around the zero line, suggesting the sideways price action that I was describing on the higher time frame. One would say that there is some divergence here. If you look at this low, and we've came almost to the same low. As a matter of fact, we did a little bit of a lower low from this low. If you use the closing, it's even much clearer. So the closing on here was this here, and the closing on here was here. So that was a 4 hour divergence that is on the chart. The question now is the 4 hour divergence finished its work? I think it's probably almost finishing. Once we get the next 4 hour candle print, it would confirm whether the divergence has completed, its move from here to here. So from here to here, you can see there's an RSI divergence on here. There's also a MACD divergence. This is your MACD first low, and you came lower low, and your MACD made a higher low. So there's divergence on the 4 hour time frame, and I think based on this 4 hour time frame, it's giving us a green candle here. We haven't had a shooting candle yet, a candle with a wick suggesting that the move is down. And this is why I think price could potentially push a little bit to the 97,541 level. But as our cycle is pointing down on the 4 hours as well, I think it would push up and then it will come back down. So that's my trade bias on the dollar index. It's about 20 minutes recording, and I'll probably want to end the recording right here. Thanks for your time. I pray that everybody has a profitable trade in the coming week. Target wise, I forgot. So target wise, if we do break the line as I was showing you, our first target is 96.770, where I have our price target labeled. Cheers, and have a great training week. It's going to be a short week as it's a holiday here on Monday in the States. It's Labor Day here. So enjoy your holiday weekend. Bye.